Good afternoon, everybody. This is Dennis Wilburn with the Active Trend Traders for the Aftermarket Monday. I want to welcome everybody to today's webinar. Let's get in, and this is just a quick jump start on what's going on in the week. And so we'll see how see if there's anything worth looking at. We woke up today to a market that was up about 120 points in the pre-market futures, and then it went up from there. The question that I have as we move forward, okay, is the end of the year move starting early, or is it just basically a flourish before it actually does a little bit more of a dip and pulls back down? Some of the study, well, let me finish the announcement here. All the materials presented are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. One of the things Jesse Livermore used to say, he was all about just, he'd buy it and then he'd sit on it. And so he says, you buy it right, then you sit tight, and that's where the big gainers come from. If you ever read his history, his biography, it talks about some of his bigger gains that made him the wealthy person he was several times, was in fact when he did this. He'd have a large position that he would sit on, and then that grew into much of his wealth. So Aftermarket Monday, what our objective is Aftermarket Monday is one, timely actionable intel at the beginning of each week, market review, stocks, ETFs that may be sitting up, what else, where else to focus. As I was saying, I just completed and I'm going to be making a presentation on this to the premium active trend trading members in the near future, but I just finished an analysis, or where we went back and did some back testing, and I was trying to put a bracket around the October, the October run that the market tends to go on. And what I found was that the bracket was from about September 23rd through actually late in the year, the December 11th. So that's kind of the bracket we're looking at for when we would expect a turnaround in the market. When I say turnaround, that's the end of year rally that often people call the end of the year rally, the Santa Claus rally, the October, the Halloween rally. They call it a lot of different things, but that's where the bracket is. So we'll see if this is a breakout or a fake out with regarding the indexes. So here's the stocks that we're looking at. I'm looking at, we'll take a real quick look at FAS, we'll look at IBB, GDX, UCO, and then also in the very near future on the three main stocks that I keep my eye on consistently, which is Tesla, NVIDIA, and Netflix for the time being, for right now. I'm going to be covering in the near future why do we need, or why do we want to be keeping our eye on stocks like those three? There's a lot of good reasons. Two of the primary reasons are they move a lot every week, and they have really good technicals that can be predicted off of. And so, but again, seasonal expectations, September. Pullback for October setups. That's the expectation. But are we starting early? So let's get into the individual entities and just take a real quick look. Let me go here. SPX, as in fact, I would like to say SPX is broken out. It has broken out above its past closes. So we have a closing new high for the year, which typically means, hey, we're going to continue and move higher. However, we do have some resistance up here at 2490 level from this shooting star right here. So we see if we get past that. If we get up to that, just bump its head and turn around, then that is indicative that that was the high resistance. TSI weekly chart. Even with the big, powerful gap up move we had today, TSI weekly chart didn't move a lot. I mean, yes, it moved back up into the up direction, but it's not making new highs. And so you can, in fact, with the TSI, let me get a line to go across here. TSI, you can basically draw a line across here like this. And for whatever reason, TSI is one of those wonderful oscillators that you can, in fact, do trend analysis on the TSI itself. So if it pushes back up here close to this trend line, that could, and price action does push higher on a weekly basis, this would be considered a lower or negative divergence, and so that may lead us to a pullback into the October timeframe. We'll wait, we'll see. 2480 support, and again about 2490 resistance at the current time. NDX was a little bit NDX. Speaking of Indy, anybody Notre Dame fans out there? How did Notre Dame do this weekend playing football? I know my Longhorns beat San Jose State. I'm so proud. That's tongue-in-cheek, guys. Okay, let's see. NDX, yes, gap up, but not really a lot of enthusiasm. The S&P had the most enthusiasm, so not a lot of enthusiasm as we see. We're pushing back up, but TSI not running ahead of itself. You know, it's kind of putting in a little squeeze pattern here, where if it does break up, that could tell us, hey, we're moving higher, or we could just be pushing back up into resistance and pull back. Let's see what the rest of the week brings. And at the same time, recognize Dow was the index that was in charge today. Russell, really quick. Russell, nice rebound off the whole cluster of moving averages here. The 100-day, the 50-day, the 20-day, the 8-day, and you get a nice rebound and breakout today off of that move. And so do we want, what's our trade off of this if we're trading the Russell or one of its ETFs? ACC all the way. Is basically a pullback into this big candle would, give us a potential move or a pullback into the moving averages like we had last week. This was just, as it turns out, this brief little setup here on the NASDAQ or on the Russell was the setup, to actually get into a trade, but I prefer seeing my TSI down here, and but TSI did push up higher on the True Strength Index and broke above the zero line, so we may be moving it. We'll see if Russell does move into a stronger up. So I'm going to throw up the IWM just real quick. IWM, again, gap up, and so would have been kind of uncomfortable to buy on Friday. We could have bought it off support, but we had TSI heading down, and we did not have the TSI tick up yet, so we didn't have a legitimate signal. And now we have a TSI tick up. However, on IWM, we're right back at resistance. So in reality, all this move between Friday and today, while it's impressive, it didn't really trigger us into a potential trade. Let's take a look really quick at a couple of other stocks we're looking at. Tesla got a really big pop up today. As you can see, it held again. Tesla also did not give a real, indicative. Friday's action on Tesla looked like it was going to continue to fall here. I know I was stopped out of my strategy 3 trade right at 10.25 today, $10.25, and it continued to push higher here. Now that it's broken out of this wedge here, we can anticipate, watch for a pullback into the midsection of this candle or back down to the downtrending line, kiss that trend line goodbye to move higher. Tesla, huge move today. I mean, the range on it, 1371 was its range. If you go from the low close on Friday to today, it's about a $20 move on Tesla. So just hanging on and waiting for Tesla. It may be, getting back in gear. I leave these two lower trend lines on the chart simply because, one, the lower one connected two lows, which that made it a legitimate trend line. However, the upper one connected it connected lows here, but as you can see, it dissected this candlestick here right at the body line. And typically, a lot of technicians believe the bodies of the candles provide a more significant informative level of support and resistance. So keep that in mind. And so that's why it's sometimes a good thing to have two trend lines on there. NVDA, a nice little tick up. The volume increased a little bit, bouncing up a little bit. So we do have a TSI tick up on this. And so, not a real solid signal, but we have to count it as, yep, we do have a signal here. And so any type of a retracement back into here, if I were trading NVDA to the upside, it would be on a retrace back into the midsection of this candle, today's signal, or a breakout above, the 171 level for a move up to, 175 or higher. NVDA is still looking really good. Netflix, similar type situation. You get Netflix pushing up. Volume at average. Nice push up to the top of the Keltner channels. And so I'll just, I'll be sitting there waiting for a pullback into the 820 or 50 combo for a bounce higher. We got a brief pullback on the 9.5. And it moved up from that. And then some of the other stocks we're watching, our Catfish Special that we talked about on Friday. Also for premium members, I'm going to have a training session coming out on bottom fishing with the good quality, growth stocks and some of the ETFs that we've been looking at, how to really anticipate, a larger move. QIWI, which was part of the IBD 50 earlier in the year, it's on the running list. We get a push up, got a shooting star going on right now. When we went up and made, hit these old highs. So look for a pullback into the support area of the moving averages, and then for a reversal off of that. So I'm keeping my eye on QIWI. The other one we were looking at was LGIH. Why didn't that type in there? LGIH. LGIH, again, we did get a breakout. We got above the 820, but that's really wimpy volume. I mean, it didn't even come close to make it up to the to its 50-day moving average on the volume, which is about 438 shares. So I'm not really that encouraged about this. But yeah, just really wimpy volume. So that's not a good sign for LGIH. And let's see, what else do we have? And the last one we were looking at was YY. And I don't know why. YY. Again, YY has put in this, this little cup type of pattern. Maybe if you're going to do a 7-week cup pattern, we've gotten through 1, 2, 3, 4, 5, and so you would need about 2 or 3 more weeks, and then a little bit of a pullback and a move higher. Again, kind of just kind of a little bit not strong, but then not absolutely weak either. So it's hanging in there, but it didn't go with the Dow today, and it actually didn't go with the NASDAQ. So keep that in mind. So, okay, how are we doing here? We're doing okay. We're about 13 minutes in. The last one I forgot was cruise. And it also is one of those that, again, it sold it. Now, okay, we can consider cruise as having put in a higher low. We get a little bit of tick up on volume, and so it would still have to work its way back up through this overhead resistance, which runs from about $59 up to about a little bit over 60 due to the past high and the moving averages. But we do get a TSI tick up today, green candle closing above the red dot. So we could consider that a potential buy signal on that, on cruise. Stop loss on it would be immediately below 55.57. Or on a stock like this, I give it 20 cents. So my stop, the low is 55.59. So if I dropped like 55.25, I want to be out. I would size my position accordingly. So, okay, that covers that. There we go. Okay, that covers all we wanted to cover for today. That should get everybody locked and loaded and ready to go into the rest of the week. I am doing a presentation for the Bay Area Moneymakers on Saturday. It is a 2-hour training webinar. And it basically asks the questions: you're tired of sabotaging your trades? Do impulsive and reflexive trades kill your P&L? Join me on Saturday, 9 o'clock Pacific time for the BAM. And we're going to be, basically, I'm going to be covering and training on conquering destructive habits and self-limiting beliefs that may be in the way of helping you become a good, better trader. For non-BAM members, it's $50 for the training. And you'll have access to the training slides and the recording. But for BAM members, it's just a regular monthly dues of $15. So if you're not a BAM member, you can always join the BAMs. You don't have to pay a recurring monthly fee, but a one-time will get you into the training. You can register for it right here at bayareamoneymakers.com, RSVP-dues. And again, that's Saturday, the webinar, 9 to 11 o'clock Pacific. And there's a little plus to this also, because I'm going to be talking into the BAM a little bit about this oscillator that has been very, very powerful on highlighting reversals at lows. In other words, picking stock or picking the bottoms on the stocks, and so you'll get a little bit of, if you're just a regular premium active trend trading member, you'll get a highlight of where we're going with that. So until next time, I bid you adieu. Remember, absolutely believe that price action movement patterns are repeated. I do. So, no, Dorothy, there is no new chart showing setups for this week. That'll be coming out later today or this evening. Okay, good question. Thanks, everybody. Recording will be up shortly.